Hello traders, the title of the video is Fibonacci Trader explains the 200% Fibonacci extension. Alright, so you may be saying to me, George, the 200 is not a Fibonacci number. That is correct. But professional Fibonacci traders do use the 200% as a Fibonacci number. Okay, as a Fibonacci extension level. Alright. So in this tutorial, I want to talk about the 200% Fibonacci extension level. What we need to understand when we are using the Fibonacci extension or Fibonacci retracement, we need to understand that this is a measuring tool. Alright, we are using the Fibonacci retracement to see how much profit people have taken for the pullback after an uptrend or for the rally after a downtrend. We use the Fibonacci extensions, all right, to measure, okay, how far the price may go and also set a profit target. So generally speaking, in theory, Fibonacci retracement or Fibonacci extension, all right, are measuring a tool. But they are also psychological, okay, tool. Can we say that? All right. Can we say that it's a psychological tool? All right, because it allows us also to go into the mind of other Fibonacci traders, in the mind of investors, in the mind of technical traders, and to see, to understand what's going through their mind. Especially when we are talking about the 200% Fibonacci extension level, we must start going into the mind of a market participant. All right. The 200% Fibonacci extension level is highlighting the fact that those who bought the stock at the beginning of the move have now doubled their profit. So as I told you, the Fibonacci extension is a measuring tool. So the price start going up here. This is the 0 level, and then it go to the 100% level, which is right here, and then as it breaks the border level and start going up, we have the 50% level, 61.8%, and now we are at the 200% level. That level is a psychological Fibonacci, a key level. The 200% Fibonacci extension level is a psychological Fibonacci extension level, because if you bought it here, all right, and you hold that stock, since 2009 up to now, you'll be going to your mind and say, wow, I have doubled, my profit. 200%, profit, all right? So you will be monitoring carefully and say, well, should I take profit now? Or will it go up more? All right, so all kind of things going through your mind, but definitely one thing is certain is that you do not want to give much of that profit. You will not, all right, unless you are crazy, a Fibonacci trader. Though no one is crazy though, all right. So psychological price low. So when a financial instrument reaches the 200% Fibonacci retracement level, there was something. We are likely to see some reaction. As you can see this year, for this stock, Checkpoint Software Technologies belonging to the technology sector, software application, reaches that level. We are now in 2017. If you are watching this video, 100 years later, when we are no more in this world, all right. This is 2017. If YouTube is still around, right here, Now you can see the tail. Why people take profit here? This is the psychological part of that Fibonacci extension level. People did take profit this year. All right. So what I will recommend to traders, all right, at the beginning of the year, each year, all right, look for stocks that have reached the 200% Fibonacci retracement level, and then if they were going up before, put them on your bearish watch list. Doesn't mean that they're going to be completely bearish, but it means that there will be some profit taking at that point. I'm not finished here, so don't go away, because sometimes they watch part of the video and they miss the best chunk or the best part of the video. So I have more to share in this tutorial. All right. So if I go, for instance, to the weekly chart, this year, 2017, here we are in June, you can see that there were, for 2 weeks, you see here, it pulled back, so retest the moving at 14. They rise in moving at 14 and bouncing up again. All right, so is that good? So that's the orange line here, 112 level. It went a bit above it, pull back. Another thing I want to say to traders, all right? If the smart money want to sell when the price is at the 200% Fibonacci extension level, very often they will not like to sell exactly at the 200% Fibonacci extension level, because in fact the 200 is not a Fibonacci number. So what usually take place, which you need to understand, they will push it a little bit more up to the 214% Fibonacci extension level, a little bit up. So they want to sell a little bit above the 200% level before dropping it down. So when a stock is at a 200% level, don't be surprised that sometimes the price will go gently to the 214% level before they will sell it. Doesn't mean that when a stock reaches that level, it will become completely bearish. But if we have a clear-cut sell signal in that zone, well, we will take it. All right? On the other hand, if the stock was going down and reaches that 200% Fibonacci extension level in a downtrend, and wait for it, sometimes you'll be surprised, they will push it to 214% Fibonacci extension level, where orders are placed a little bit above the 200% level. As soon as those bullish orders are filled at the end of a downtrend, the price will start bouncing back up. One more thing that you need to understand about the 200% Fibonacci extension level, I have told traders at Day Pro Traders YouTube channel, where I'm busy talking about Fibonacci key levels, all right, that the best place to look for breakout is what? The 161.8% Fibonacci extension level. I also talk about the 261.8% Fibonacci extension level. But sometimes we do see a breakout in a zone of 200% level. Because as the price reaches the 200% level, what you need to do is to go to Google Finance, check the economy news relating to that financial instrument. Sometimes some companies are creating so much value, they are accumulating too much cash flow, and they are dominating a sector. So which means they are increasing their market share, they are beating the competition big time, all right? Hands down, all right? So you need to go to Google Finance when the financial instrument reaches the 200% Fibonacci retracement level, do a little bit of fundamental analysis. What's going on? Has he passed the Google Asset test? Yes. Are they making more money? Are they gaining more market share? What are the competitors? Check the S&P 500 and try to play a little bit of mind game. Do you understand? All right, try to, okay, a bit of mind game exercise. All right, try to ask a lot of questions, and you will be surprised sometime. As an ordinary trader or retail trader, you will find out that you will discover what is likely to take place. So prior reaches the 200% Fibonacci retracement level. Is not a Fibonacci number as such, but we do use the 200% Fibonacci extension level as a Fibonacci key level. At that point in time, if the price is going up, people who bought it at the origin, 0% level, have doubled their profit. They will be prepared to take some profit. They are not stupid. They will take some profit. All right. So we want to put those stocks on our bearish watch list, expecting a kind of profit taking. If the financial instrument was going down and it reaches the 200% level, we will put that stock on our bullish watch list, waiting for those who bought it at the origin to take some profit, creating a bit of bounce up. Understand that the smart money want to sell. They want to sell high. Therefore, they will prefer to sell not exactly at 200% level, but at the 214% Fibonacci extension level, just a little bit above it, before we see the reaction down. All right. You want to understand also that sometimes breakout do occur in a zone of 200% level. Why? This is another thing, because the contrarian traders, don't forget the contrarian traders. The contrarian traders are mind game market participants. They know that at this junction, a lot of market participants would like to sell. And the bearish trader will try to sell, as I explained to you already. And there will be orders here to sell. So the contrarian traders say, no, we will bet against those people, expecting the price to go up. So they will buy instead in the zone. And sometimes, that's why I say to you, sometimes we have a breakout in the zone of 214% Fibonacci extension level because of those contrarian traders. And you see the price running back up to the zone of 300%, even to the 314% level. Due to fundamental reason, there is a lot of things going on in the zone of 200% level. So you may say to me, Joe, how do we handle it? Then I will say to you, that's a very good question. The best way to handle this around the 200% level is to look on your left-hand side. So what have they done there before? They have sold it. All right, look at this one. This is Checkpoint Software Technology. So I already recorded a video at the 2-4 stock trader, all right, YouTube channel. So I've been talking about day pro traders. I've been talking about 2-4 stock trader because I'm a 100% YouTuber, all right. Okay, so now this to make you laugh a bit, all right. Cheer out, my friend. Okay, so what have they have sold it here before, right? So I've talked about it. Now, if they sold it here before, what I've said to traders before, there's nothing new in the financial market. What has happened before is likely to happen again, and the smart money does not forget what they have done before. If they sold it before there, they will try to sell again there. But I also mentioned to traders at a 2-digit 4 stock trader YouTube channel that there is something that we call the negation of a trading signal. Have you watched that video? The negation of a trading signal. Stock trader explain the negation of a trading signal. All right, if you haven't, go to 2-4 stock trader YouTube channel or YouTube search that video and watch it. Though they did sell it here before, sometimes the market sentiment may change there. So instead of selling, they will buy. That's what we call the negation of a trading signal. If that is happening, plus the contrarian activity here, we are likely to see a breakout here. So you'll be saying, George, you did not answer my question. I asked you a specific question, George. How do we handle it? Okay, now we can answer that question. We'll use what we call a top-down trading method. So traders say to me, here we go, George. You're going to say it again. Now, traders that have been following us know exactly what I'm going to say. We're using multiple time frame trading method. We're on a monthly chart. It's at a 200% level. Okay, we want to handle it like a pro. We go to the daily chart where the signal will be fired. Is there a signal? If there's no signal, we cannot sell, yes or no? All right? If there's no signal, don't invent it. All right? So we draw a line. Price is above a bullish trend. All right. Is he showing some weaknesses? Now we are switching our attention to the price. So you can see that the smart money pushed it a little bit near the 214% Fibonacci extension level in the zone of $118 level. And look at that, they push it back down. You see that volatile bearish candlestick bar here? Zoom into it all. You see? Here it is. What you need to do, that bearish long candlestick bar, we need to watch it carefully. Why? Because it's reflecting a market sentiment. So what we need to do, very simple, we highlight the low and a median line. Generally, after that bearish long candlestick bar, if people want to sell it, they will try to sell it near the median line of that candlestick bar. Are they selling near the median line of that candlestick bar? All right, hold on, please. Okay, let's see. I'm going to remove my Fibonacci tool and draw another one. We're going to go back again to that daily chart, the signal time frame. All right. So now I'm going to apply Fibonacci retracement carefully. I want to do it like Lavoisier. Now I want to see what is the 50% level. The 50% level is just the dotted line above the orange line here. Can you see that dotted line above the red line? So though people did sell it here, strange for me. It's not looking bearish. People did not sell it near the 50% Fibonacci retracement level or that bearish candlestick bar. All right, the price now at 78% Fibonacci retracement level. Will they sell there? So in that case, I will wait if I want to sell. There is no signal yet to sell. All right, there's no signal yet to sell. I can't invent it. It's no. Though some people did sell it before. Once the price came to the 50% level, there was some seller here. You can see there was some seller here. The signal fell for them, and now the price start going back up. And the price still above that red channel. What can we do, my friend? George? Okay, now we choose another point here. We draw a line that is parallel. Sometimes you think it's parallel, but it's not truly parallel here. You see, when I do like this, it's not really parallel. That's what I don't understand about this software. Yeah, that's what I don't understand. Okay? We want it to be squarely parallel, all right? But sometimes you draw the line like this and then you zoom into it, it's not really parallel. And as a market geometry traders, we don't want that. We want it to be perfectly parallel. Okay. All right. Hopefully. So we draw a channel, and because we want to monitor it carefully if they are selling. Are they selling? Is there a signal to sell? All right. They did not sell it near the median line or that bearish candlestick bar on the daily chart. Will they sell near the median line, which is bringing us near? Or will the price start forming a bearish chart pattern here? All right. So until there is a signal, we cannot sell. Now there is no signal. So we wait. So that's how we handle it. So when we see that the price at 200% level, we start seeing weaknesses. We drop down to the daily time frame. We wait for a clear-cut signal, break below, retest, either break below horizontal key level, retest it, or break below a trend line, retest it, or break below a channel and retest it, or break below the median line. As you can see, break below the median line, retest the median line. Okay, and then we implement a top-down trading method to trade it. All right. So now on a daily chart, we are now on a daily chart. If you retest it here, that will be the signal for the monthly chart trading setup. And then we will now sell it on a daily chart. We go to the hourly time frame, waiting for the entry. The entry is another signal on the entry time frame. Break below, retest, break below, retest, break below, retest. All right. Okay, this is what we are looking for. So now so far, or either break below retest, or we are looking for bearish chart pattern. Okay, so if we form a double top here, we wait for the common center line along here. So if where it's going up, form a double top, be patient, wait for another candlestick bar to push it back below that trend line. Then you have a signal. If you do not want to do it, you want to be early in the trend, you form a double top, or you see a hammer or a bearish candlestick bar, using candlestick pattern traders, maybe ahead of other traders, and then you go to then you have a good reason on the signal time frame, and then you go to the hourly time frame where you are looking for another good reason why you should sell. All right. We do not want the video to be too long. Let's go back again to the monthly chart. We are talking about Fibonacci trader explaining the 200% Fibonacci extension level. It is a measuring tool. It is also a psychological trading tool. If the price reaches the 200% level in an uptrend, most market participants that bought it at the origin had doubled their profit. They will be itching, so to speak, to take some profit. We'll put that stock in our bearish watch list. If it was in a downtrend price going down and reaches the 200% Fibonacci extension level, all right, those who sold it at the origin, will be itching, to cash a bit of profit, creating a bit of bounce up. We'll put that stock in our bullish watch list, expecting a kind of profit taking. We understand that the smart money, if they're going to sell, they will sell high. we want to watch the level of a 214% Fibonacci extension level, where they will place orders, a barrage of orders to sell. Price will bounce there. Those orders will be filled before it comes down. All right. You have also breakout in a zone of the 200% Fibonacci extension level because of the activity of the contrarian traders, okay, that are trading, that are betting against, okay, other traders. But also due to the negation of a trading signal, because the smart money did sell it here before. If the market sentiment has changed, they will buy instead. If the company, the fundamental, they are creating more value, they will buy. Due to the negation of a trading signal, we may have also a breakout. So breakout due to contrarian trading, also due to the negation of a trading signal. The question that all Fibonacci traders are asking is, did George tell us how to handle it? In order to handle it, we will use a different time frame trading method. As you can see, the price now at the 200% Fibonacci retracement level on the monthly chart. That monthly candlestick bar must close. It's not yet closed. How do I know? Because today is the 25th of June 2017. It will be closed on the 30th of June. So the best scenario is to wait for that candlestick bar to close, and then we monitor, we analyze that candlestick bar, okay? And then we go to the daily chart waiting for a clear-cut signal. If there is no signal to sell, well, look for an opportunity to buy above the level of 11553. So at this junction, I would say to trader, priority to bullish signal above the 11553 and priority to bearish signal below 11553. In all cases, one must use different time frame trading method without ignoring the economy news, the fundamentals, and the trading triangle. The market first, we are trading first the S&P 500, the sector, the technology sector, market leaders for the technology sector, Google and Apple, all right, before trading, checkpoint software technologies. All right, you may say to me, Joe, it's too much for me. All right, take it one step at a time or break it down and eat it a bit by bit, and you will be all right. All right. If you have any question or suggestion, this is your time to put in the comment section. And in due course, I will be recording another video to answer your specific question. If you find this video truly useful, all right, let us know by giving us the thumbs up. If you think to me, George, well, this is another useless video that you keep posting, all right, let us know by giving us the thumbs down, all right. If you think that this is an essential tutorial that other traders may benefit from, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Fibonacci trader explains the 200% Fibonacci extensions. Happy trading to you all and speak to you soon. Ouais, c'est bon, c'est bon. On va voir ce que ça va donner, plutôt. Ah là là. Bon, checkpoint software technology. Fibonacci extensions. 200%. Oh, bien.